Toronto has implemented a new tax on vacant residential properties. And here's the thing, unless you submit a formal declaration by February 2nd saying otherwise, the city is going to assume your property is vacant and you're going to be on the hook for the tax. So I'm going to cover 4 things in this video. Why is the city implementing this tax? Who's going to have to pay the tax? How much is the tax going to be? And where do you go to submit that mandatory declaration? My name is Jason Bondy-Sawyer. My wife Danielle and I are realtors here in the city of Toronto. If you'd like to see more of our videos, please subscribe to this channel and hit the like button as well. Now, if you're thinking of making a real estate move or you'd just like to chat about the market, you can book a meeting with us in the link in the description. So the goal of the city's vacant home tax is to boost the levels of housing supply by discouraging owners from leaving their residential properties unoccupied. The idea being that someone who now has a property sitting vacant will be motivated to either put that property up for rent or put it up for sale, either of which would boost housing supply levels. Now, this is an annual tax and it's going to be based on a property's occupancy status of the previous year. So that declaration that you're filling out now in 2023 is actually looking back at the city's occupancy status last year in 2022. So who's going to have to pay the tax? Well, let's take a look at the city's website for more information. Now, we'll include a link to this in the description down below, but we can go through it together now. You can see here they say a property is considered vacant if it was not used as the principal residence by the owners or any permitted occupants, or was left unoccupied for a total of 6 months or more during the previous calendar year. Now, scrolling further down, to put it another way, though all homeowners are required to submit a declaration of occupancy status, the tax does not apply to properties that are the principal residence of the owner, properties that are the principal residence of a permitted occupant or tenant, or properties that qualify for an exemption. Now, those exemptions are actually listed in detail further down the website here. So they include a description and the supporting documentation that you'll need to submit when applying for the exemption. I'm not going to go through that information now, but I will quickly read through the exemptions. So number 1 at the top here, death of a registered owner, repairs or renovations, principal resident is in care, transfer of legal ownership, occupancy for full-time employment, or court order. So how much is your tax going to be? Well, it's 1% of your property's current value assessment. So let's say your property's assessment is $1 million, the tax is going to be $10,000. Now, it's important to note here that current value assessment is actually different than market value. The CVA is determined by MPAC every 4 years, and that's the amount that they use to calculate your property taxes. Whereas market value is how much your property would sell for if it was put out on the open market. And at least in the city of Toronto, I can tell you that market value is typically quite a bit higher than the current value assessment. So, as I said at the beginning of this video, whether or not your property actually qualifies as vacant, you must submit the declaration. If you don't, you're going to get a hefty tax bill in the mail. So the city is putting the onus on the homeowner here. To submit your declaration, you need to go back to that same website we were on earlier, and you'll see a button in the top right-hand corner, Submit Declaration Online. So you push that, click through, and then you're going to be asked to provide 2 numbers, your assessment roll number and your customer number. Now, those can both be found on your tax bill. And I'm going to open up a screenshot here of what that looks like. So you can see in the upper left-hand corner, assessment roll number, and in the bottom there, customer number. So once you have those 2 bits of info, you simply plug those into the fields here, and then you proceed forward from that page. So we won't walk through that here now, but I did it myself a few days ago, and it is a very quick and painless process. If you do have tenants, there's going to be some extra information you'll need to provide, but again, it's a quick and easy process, and you're going to be very happy that you did submit the declaration on time. For properties that are going to be subject to the tax, you will receive a notice in March or April, and then the tax will be due by May 1st. So we'd like to know what you think. Is this tax fair or not? Is it confusing? Do you think it's actually going to make a significant difference and boost housing supply? Let us know in the comments below. Bye for now, and we'll see you in the next video.